Welcome everyone to another session of TriTech University. My name is Bill Steppen, and today we're going to be continuing our astonishing accounting series for the month of April. We're kind of wrapping it up here this week, but we're going to be looking today at some budgeting features of the AMSI software and how you can take advantage of those of setting up some budgets that maybe you and your company and your organization are striving to meet. We're also going to dive into the whole concept of departments as kind of a talk part of the budgeting functions. So we're going to be exploring those two facets today here with the AMSI General Ledger System. As always, before we get too far into the session, we'll go through some of our usual ground rules for those of you who maybe this is your first TriTech University webinar. First of all, welcome. We're happy to have you here. You will be seeing that there is a GoToWebinar toolbar on one side of your screen or the other. Somewhere on your screen, there's a GoToWebinar toolbar. Now, on that toolbar, there is a questions box. So if at any time today you have a question on the content related to budgeting, feel free to go ahead and type it into that questions box. I will do my best to answer those as I see them come into that question area. We'll still have plenty of time at the end for a full question and answers session. I don't think we're going to be using the full hour today. We've been kind of running a little bit shorter, mostly because I want to make sure these concepts are getting through, that they're making sense to everyone. So I want to make sure we have plenty of time for questions for the attendees today. Now, that being said, if that GoToWebinar toolbar is taking up too much space on the screen, if you're having a hard time seeing the presentation itself, there's going to be a little orange button with a white arrow on it. Feel free to click on that button, and that will shrink down the webinar toolbar off to one side of the screen or the other, and that way you should have no problem seeing my presentation. So without further ado, let's talk about budgeting. Now, we're going to get into a lot of concepts that we've already explored in earlier GoToWebinar sessions relating to Ledger. So we're going to be talking a lot about debits and credits. Hopefully that all makes sense. If not, stick with it as much as you can today, and when you get the email at the end that links you to this video, it'll also send a link to all of the other webinars that I have done on version 12, and I would definitely recommend exploring the module mechanics session that I did on General Ledger. That will cover a lot of the groundwork that we're kind of using to get through today's topic and content. So that being said, let's go ahead and take a look again. Now we're going to be exploring budgeting. So that's part of your General Ledger system. And of course, the concept of a budget completely not taking any kind of software into consideration, the idea of a budget is you have a certain amount of income coming in, and you have a certain amount of expenses going out, and you want to make sure that your income at least covers the expenses. And of course, the more income you have over your expenses, then the more profit you are generating for your store. So the idea of a budget is to be able to then plan for certain pitfalls or certain expansions of your store, anything that you want to have in place with that. Basically, the idea of that is that you can develop a budget in the system, and then you can do a comparison of your real life income and expense numbers against that budget at any time. Now, that also goes hand in hand with departments. We're going to explore departments after we cover the core concepts of budgeting, but the idea of departments is that maybe you have certain different kind of separate but equal, if you want to think of them as that way, areas of your store that you want to compare against each other. Make sure that a certain department of your business is profitable, that it's meeting its expectations, that it's not becoming a burden on your overall profitability or economic, whatever the case may be. I'm going to give my usual disclaimer that I'm certainly by no means a CPA, nor am I a budgeting expert. Mostly I just want to make sure that the core concepts of AIM-SI, as far as how that can work for you, are clear for you. So as you can see, I'm hovered over the menu that we're basically going to be almost exclusively focusing on today during this session, and that is the Add Change Budgets program within the ledger maintenance area. If we go ahead and select this, then the overall function of a budget is essentially contained in this one window. Now up on the top, let me go ahead and grab my little highlighter tool. It seems to always move on me every single time I come into a webinar. There it is. Okay, so up on the top is the table of budgets that you can develop. You can have different budgets for different locations. You can have obviously budgets from one year to the next. So basically the top portion is where you will be able to select from one budget versus another. Now at the bottom section, as you select a particular budget up top, you'll be able to go in and look at the actual numbers that you're putting in for your different ledger accounts in your chart to see exactly what you've got as far as the different numbers for the different months. So basically the way this works is you would start off by clicking, as always, the Add button in for this Add Change Budget area, and then up at the top right, you're going to select the appropriate location that this budget is for. I'm going to stick with my Dubuque location. You can give it whatever description you want. I'm just going to simply call this my mouse out of the way, my budget, and this is going to be for calendar year December 31st, 2019, and we'll go ahead and we'll save that. So now that I've saved that, you'll notice that first of all, it is showing up now up here on the top. So I'm highlighting what's already highlighted there. And now in addition to that, you now have some additional fields over here for working with the content below. So you'll see that there are several buttons here. One is an import detail records. We'll talk about that in a second. The insert single entry, we'll see what those options are. Basically, as far as that's concerned, you can choose between inserting single entries into your budget or inserting all of your legend numbers either with or without departments or for certain departments. And again, we're going to talk about departments as we go forward. I don't want to take departments into account just yet. I want to make sure that the basic concept of budgeting is pristine. And then below that, you'll have the ability to either select a department. If you are doing a department, you'll notice if I select insert all ledgers without departments, that option goes away. And then you'll have the option of choosing a particular ledger number if you're doing inserting of a single entry. And then last but not least is that little checkbox that says use last year's values. So if this is not your first foray into budgeting, if you've done this in years past, then you have the ability to kind of pick up where you left off as far as the numbers that you've budgeted for from the prior year, and that way you don't have to key everything in from scratch. So what I'm going to do, just for the ease of simplicity, is I am going to say I'm going to insert all ledgers without departments, and I'm simply going to click Insert Records. So essentially what this will do is down below, you'll notice that this is basically loaded in all of my income statement ledger accounts. So by default, all of the 400s, the 500s, the 600s, and technically even the 700s. Again, just for those who maybe are coming in new to the concept of ledgers, the 400 accounts are essentially your inventory income accounts, and that does also include cost of goods sold. Your 500 ledger accounts are basically your non-inventory revenues, so everything except for inventory. That might be things like rentals, memberships, services, lessons, other things of that nature. And then your 600s are all your expenses, and then the 700s are essentially what we call non-operating. So these are really numbers that you don't actually have to worry about budgeting for. They don't actually have an impact on your income statement, nor will they have an impact really on your budget. They're simply there for keeping track ledger-wise of tax-exempt sales. So we're not going to worry about the 700s for the purposes of this webinar. Now, if we come back up here to the top of the table and we just look at the first line item, 411-1 sales band. And of course, I am using a music database here. If you're not a music store, just roll with the concept. Even if the individual content doesn't apply to your business model, the actual concepts should. So the idea here is that if you make any sales out of the category of band, those numbers would go into this ledger account as far as the actual sales figures. So if you sold $6,000 worth of band instruments out of your band category, then this particular ledger account would have a $6,000 balance to it. Now, across the top, let me grab my highlighter tool again, you'll notice that this has basically the months of the year. So January, February, March, April, May, etc. And the idea here is that you can budget what you expect to have as far as numbers in every single one of these cells. So the cell, for example, for April of 2019 for sales band, and if we kind of go down the list, that'd be sales orchestra, sales fretted instruments, sales, et cetera, et cetera. So that's basically the idea here, is putting in what you expect to have or that you are planning on budgeting for as far as these ledger accounts in your system. It's both as simple and as complex as that seems. So for example, if we normally expect to sell X number of band instruments in the month of January, February, March, April, May, June, etc., that's the numbers that we're going to put into there. Now, of course, a balanced budget, again, I'm not a budgeting expert, but normally you'd be budgeting for both your revenue and your expenses. And if we think back to core accounting, the balances in these sales accounts would typically be credit balances. In AIM-SI, a credit balance is designated as a negative balance. So what you want to make sure you're doing is for these accounts that would normally have a credit balance in them, you want to make sure you go ahead and put those in as negative numbers. So for example, if we expect to sell, let's say, $2,500 worth of band instruments in the month of January, we put that in as a negative, just like that. And then going forth all the way across and then down. Conversely, any of the both expense accounts as well as the, for lack of a better term, contra revenue accounts, that would be the cost of goods sold. If we go down to the 412 accounts, which I just skipped right past, the cost of band instruments. If we assume that we were going to be budgeting for $2,500 worth of sales of band instruments for the month of January, let's say that equates to approximately $1,250 in cost. So we would go ahead and we put that in as a positive value into the budget field, the budget cell for that cost of goods sold ledger account. Likewise, down into the expenses, these would also then be positive balances, because those would typically be debit balances, and debits in AIM-SI are designated as positive balances. So again, kind of going forward, we could say that we expect to pay out X number of dollars in wages, we expect to spend so much in advertising and building rent and utilities. You get the idea, hopefully. If you don't, by all means, definitely let me know in the questions box. I'll do my best to try and explain in more detail based on whatever is not making sense. But if we expect to spend, let's say, $14,000 on wages, we could put that in. If we have a budget for $3,000 in advertising, we put that in. Hopefully, again, you get the idea. It's basically just putting in numbers. And that's essentially all you're doing kind of for this add change budget screen, really, when it's all said and done. Now, what I'm going to do is I do have some figures that I'm going to be drawing on for an example for today's webinar. So what I'm going to do is I'm going to come back here to the Fretted Instruments box for the month of April, where I know I've got some figures, and I'm going to go ahead and put in, let's say, $1,500, and again, that would be a negative into the credit value for sales. I'm also going to put in a negative 500 in amps, and then likewise down in the COGS accounts for those, I'm going to come down for the month of April, and I'm going to put in, let's say, $800 in, not orchestra, but in fretted. Leave the number in there for the orchestra, why not? Actually, no, let's go ahead and take it out. It doesn't really matter when it's all said and done for the purposes of our webinar here. And then let's say we're going to put in about $170 in cost of amps. I'm going to go ahead and save that. And then basically the way this works, if you've ever used AMSI's income statement report to get a profit and loss statement of your numbers, then the budget is very similar to that. When you run an income statement, you can do that with a prior year comparison. So after you've gone through your first year and you've closed out that first year, and by the way, we will be talking about year-end closes on Friday's webinar this week. When you get to the next year in your AMSI system and you run that same income statement, it would show you a prior year comparison. So into the month of January, February, March, etc., whatever date range you ran it for, it would give you basically the numbers from that same date range 1 year ago. And that way you can look to see if you're doing better or worse or about the same as far as your last year is concerned. That's basically the idea with budgeting, except instead of doing a prior year comparison, you're doing a budget comparison. So let's go ahead and take a look at that. This is all, at this point, 100% reporting. So into reports and into general ledger, and one of the first reports that you'll see on this listing is a budget comparison. And when you run the budget comparison, because this is, again, similar to an income statement, you can run this for any date range you want. I'm just going to do, in essence, this month, the month of April. So 4/1 through today. I hit the T key, by the way, for today's date in that second field, if you weren't sure what I just did there to get that date in there. You could then also specify the location if you want to run it for a certain location. If I had any departments already established at this time, they would be present over in that department column, because I've not yet dove into departments in this system. We will be in just a few moments, but if we did, they would be showing up there. Notice also that there are two checkboxes down here for consolidating locations and consolidating departments. So the idea there is that if you wanted to just take, if you have more than one location and you just wanted to get a budget comparison for all of your locations, so again, thinking back to where we had set up the budget, recall how that was specific to a particular location. When you're running the budget comparison, you can either run it for one, the other, you can run it for multiples. So I just held down the control key so that I could select both. Not that I would have had to do that. I could have simply left them completely blank and then it would have run it for both. But it's only going to be looking at the Dubuque location right now anyway, because that's the only location I have a budget for. Now, if you don't check mark consolidate locations, essentially what you're going to see is the first location, its budget comparison, then the second location and its budget comparison. If you consolidate locations, you're just going to see one report, if you will, of all locations one line item per ledger account. So in other words, if you had, let's say, $2,000 worth of sales budgeted for, again, maybe category 1, let's call it the band category because that's what I've got in here. If you had $2,000 budgeted in sales for location 1 and $3,000 budgeted for location 2, then when you consolidate the locations, you would just see one line item with a budget of $5,000 budgeted for that particular ledger account. If you don't consolidate the locations, you'd have report section 1 for the $2,000, you'd have report section 2 for the $3,000, and you would see the individual locations respectively. So that's the idea behind consolidate locations. The same thing is also true for consolidate departments. So if you have set up budgets for individual departments, then you could select them by department. You can also select them by location, and then you would get either the individual reports, or again, if you consolidate them, you'd be seeing just the one report with all the numbers crunched together. Enough chat, let's go ahead and look at this report. So I'm just going to go ahead and print this to the screen, and we will take a look at our very first budget comparison. So as you can see here, or hopefully you can see here, let me again grab my little highlighter tool and close the door that I just opened with my chair. So we can see here I've got sales of fretted instruments, and I currently, for this month, so it was 4/1 through 4/22, and the run date was 4/22 at 1:20 in the afternoon. For this date range, I have $760 in total sales for that ledger account, and I've budgeted for that particular month for $1,500. So over then, further over, I have a variance. In this case, I'm still sitting below my budgeted amount of $740. That's the designated by the parentheses there, and the variance is I'm basically well, you can see the number there. It's basically a percentage of the variance there. Same thing for the sales of amps. I'm currently sitting at $359 in amp sales. I budgeted for $500. I still have about $141 to go there. Now, if we scroll down, first of all, notice how these are showing as positive values here, because the actual budget report will act much like the income report would with the income statement, where this is going to essentially show you positive figures for credits and negative figures for debits. It's the opposite of what the actual ledger is doing, but it's doing that basically for readability purposes, because you don't want to look at sales and see negative numbers. You want to see positive numbers. If you were seeing negative numbers in here, then you've had more returns in a category for that date range than you have had sales. So just bear that in mind. Notice how I do have some sales here for other categories, band and orchestra, general accessory. I don't have anything budgeted there, so basically it's showing me that I'm essentially over my budgeted numbers by that amount. And then likewise, we've got a total down at the bottom for merchandise sales. There's my actual number. There's my budget. There's how far I have to go to essentially meet my budget. If we keep on going, so let me go ahead and clean up that mess of potatoes with all my marks. We can see that likewise, I've got some numbers here for costs. So let's go ahead and grab the highlighter again. So we've got the cost of amps and speaker enclosures. I've got $200 worth of actual cost of goods sold in that account. And then I've budgeted $470. So I'm actually, again, kind of now over that, if you will, by the $30 there. So thinking of it, kind of in that respect. And I don't really have much else budgeted at this point. So just bear with me as far as those other numbers are concerned. Overall, you'll get down to the cost of that particular line item, and then we get into the actual expenses. And then finally, we would get basically all the way to the end where we have our final line for total net income or loss. So there's the amount that we're currently sitting at as far as Revenues less expenses, we're sitting in the black of $1,140 and some change. We've budgeted for a total net income of $1,000, so we're sitting pretty good right now as far as I'm concerned. Of course, I'm weighing this budget for the purposes of the webinar, but hopefully you get the idea there. That's basically the idea behind a budget. So you set up your numbers, and then at any point you can run this report to see how you're comparing against those numbers. If there's any questions at all on that, definitely get them into that questions box for me. Otherwise, let's go ahead and switch gears, and we will now dive into the whole idea of departments. So basically, when it comes to departments, let's say that you are a music store and you've got a band and orchestra department, you've got a combo department made up of guitars and keyboards and percussion, whatever it might be. Maybe you have a print music department, maybe you have other departments that aren't necessarily inventory specific. Maybe you want to departmentalize, if you will, your services, your lesson studios, your whatever. The idea behind departments is you can essentially create any number of departments that you need. I think there's actually a limitation of 50. Hopefully no one needs more than 50 departments. And then you can associate those departments with ledger accounts in your system. So we're going to take a look at this. If we go back to maintenance and to ledger, we're going to take a look starting off with add change departments. And the department is very, very straightforward. You simply put in a code, and that can be any number between 1 and 49, and then you give it a description. So let's go ahead and call this combo, and we'll save that. Let's add another one, and we'll call this band and orchestra, and we'll save that. Let's add a third, and we'll call this print. We'll save that. Let's add a fourth, and we'll call it services, and we'll save that. You can see it's very basic. There's not a whole lot going on here as far as the creation of departments. Now, what do you do with these departments? Well, you assign them to ledger accounts that would be going onto your income statement and your budget comparison, basically the accounts 400 and up. So the way to do that is we stay in maintenance and ledger, and we go to the chart of accounts. And in the chart of accounts, we can go down to those individual ledger accounts. Notice how if I'm looking at non-income statement ledger accounts, the department drop down here is not highlighted. I can't do anything with departments on ledger accounts that are below 400. So basically your balance sheet accounts, if you will. If we go down to the 400s and up, notice how if I just come right here to the 300s, as soon as I move down to the line 400, basically what we'll be able to do is we'd be able to go in and select a department, and for some reason it's not letting me do that. So, oh, that's because it's the 411-0. I'm not sure why that's in there. But you can see how on the 411-1, I can now select a department that I want to associate with that ledger account. So in this case, because it is a sales band, I'm going to select band and orchestra, and I'll go ahead and save that. I'll do the same thing for band and orchestra accessories. I'll select band and orchestra department for that. I'll go down to sales of orchestra, and I'll select band and orchestra for that. If I take a look at other accounts here, so let's go to sales print. I can put that with the print department. Same thing there. I'll put that with the print department, the print guitar, print instrumental. Hopefully you get the idea. Get the sales fretted instruments, and I'll put that with combo. By the way, if you're not a music store, again, don't worry about the individual content, just the concept. So let's say if you're a firearm store, maybe you have a department for firearm sales. Maybe you have a department for ammo sales. Maybe you have a department for your range activity. Maybe you want to have a department for your memberships. Even though these, for the most part, are individual ledger accounts anyway, you could still technically set up departments if you wanted to take advantage of this kind of functionality. Now, where this really, I think, comes into play is not so much basically setting up the departments themselves. Hopefully that's fairly straightforward. But where I think a lot of folks tend to get a little bit lost is in the expenses. So obviously things like electrical, phone, things like utilities, these are shared expenses. How do you account for those when we get down to the 600 accounts and there's just one field for wages? Obviously, we can't just say all wages are falling under the band and orchestra department or the combo department or the print department. So how do we accomplish that? How do we account for where more than one department is going to take the share of activity in a ledger account? And the solution to that is called department allocation tables. So back into maintenance and ledger, you'll notice right below add or change departments is the line for maintaining department allocation tables. So what is a department allocation table? Well, it's essentially another department, if you will, but notice how there's an additional tab here now for allocations. So on this department tab, we're going to give the allocation table a name. So let's call this utilities. There we go. Now I can type. We'll go ahead and we'll save that. And then what we're going to do is on the second tab, the allocations tab, basically what we need to do is we need to come up with all of the departments that are going to share that department allocation, and we're going to give each department a percentage, and the total percentage needs to come out to 100%. So if we're talking about utilities, let's actually go, no, let's stick with utilities. Let's say that our first department allocation is combo. Let's say that the floor space of the combo department is, let's just say, we'll give it a number of 40% of the total floor space, square footage. So we'll basically just say that that equates to 40% of our allocation. Notice how this now says 40 up here, and then down here, if you can see where my mouse is, I've never determined if you can see my mouse or not, but notice how that is 60%. So 100 less 40 is 60. And basically, like I said, we need these numbers up here to come out to 100%. This number ultimately needs to get to 0%. So we just kind of keep right on going along. Let's add another line item. Let's say that the band and orchestra department is, let's say that that's 25%. So that leaves us 35%. The next one is going to be print. Let's say that that is 15%. And then the last one will be services, and that's going to be 20%. So that is now 0%. All of these come out to 100%. And when we save, we now have a department allocation table called utilities, and we can associate that just like we did with the individual departments back on the chart of accounts. So if we head back there now, maintenance, ledger, and chart of accounts, and we'll go down to the utilities line and we'll select it and we'll say department. You'll notice now has the 4 individual departments, but it also has the department allocation table as another option for utilities. And then we'll go ahead and we'll save that. Now, you're probably not going to have an individual department allocation for every individual ledger account, but basically whatever percentages you need to set up to share those expenses, or maybe even in some cases the revenues, you just want to make sure you've got an allocation table for it. You might have noticed when we went to the setup of the allocation tables, it mentioned that the code associated with it needs to be between 51 and 99. So essentially you've got 49, up to 49 department allocation tables that you can set up. Again, hopefully that's enough. If, you know, at some point down the road, if someone calls us up and says, hey, I've run out of departments, I've run out of department allocation tables, of course we'll cross that bridge when we come to it. But hopefully that's enough. We've never had a problem with that not being enough to date. That's not to say it won't be that way down the road, but it is what it is for right now. So now, basically, if we were to then go back to our budget setup, so we go back to maintenance and ledger and add change budgets, again, maintenance, ledger, and add change budgets, in case you didn't see where I was going, because maybe it was a little bit fast. But we're now back to the add change budget screen, and there's the budget that we had just basically for no departments. Now let's go ahead and add another budget here specific to, let's say, the combo department. So let's go ahead and hit the add button here, and we'll say location Dubuque, description is combo department, and then down below, once again, we can basically put in whatever our numbers are. Now remember how when we set up the department allocation table, and in the case of utilities, the utilities department allocation table, I mentioned that the combo department was going to eat 40% of the activity to that department allocation table. So in other words, what that means is when you're setting up your budgets, you're never going to set them up for an allocation table. You're just going to set them up for an actual department. So in other words, we come in here, let's go ahead and just do the next year, just because you can only technically have one budget per calendar year. But let's go ahead and let's say that this is going to be for one department, and we'll choose the combo department. And then we could go ahead and insert those records. So then basically the same thing is going to happen. You're going to have all the ledger numbers there, and then you can go in and put whatever your numbers are for those months and those ledger accounts. When we get down to where you might have tables being used, like the department allocation table, remember how I said that the utilities line was going to be 40% combo, I think it was 25% B&O, et cetera, et cetera. If you had, let's say, $1,000 going into the ledger account here for utilities, then $400 of that would essentially get expensed via or would show basically underneath the budget comparison for combo. Same thing actually holds true for your income statement, because your income statement can also make use of departments too. These are not exclusive to budgets. So when you run your income statement, you could also run that for a particular department. Let's say you're running it for the combo department, and you would then see just the ledger activity, both revenues and expenses, that are assigned to that department. So in other words, if whatever those ledger numbers are, plus the ledger accounts that are assigned an allocation table where a certain percentage of that goes back to the department. Again, hopefully this is making sense. If not, let me know. But basically that's the idea then, so that when you go to run your budget, now obviously I don't have any numbers for the next year, but when you go to your report and you go to general ledger and budget comparison, you'll notice now over here in the budget field, or excuse me, the department area, I could select any number, one or more of departments. And again, if I wanted to, I could consolidate those departments. So that's the idea there. And again, when you are running your income statement report, if we go ahead and take a look now at the income statement report, there's also departments there that you could also run this for. So that's the idea there. Now, one thing that I do want to just make sure I mention here is anyone who's currently using MSI for these reports and you want to explore the idea of setting up departments, what I would recommend is to try and do that between fiscal years, if at all possible. It's not a big deal if you don't want to wait, or if it's, let's say you're in month 1 out of your fiscal year and you want to go ahead and get started with departments, you don't want to wait 11 months to set all this up. Not a big deal. Just bear in mind that any of the ledger activity you have already in your system leading up to the present day, none of that activity is going to be associated with a department at all. So when you go to run an income statement, for example, for let's say combo, it's not going to show you any numbers specific to the combo department, even if you ran it just for that ledger account of fretted accessories or whatever it might be, because the activity doesn't have the department. Not a big deal. What I would recommend is feel free to go ahead and set up your departments, but then if you are going to be running these reports for a date range that would include activity where there is no allocation of departments, make sure you just consolidate when you're running for those particular date ranges, because that way it will catch the ledger entries that do not have a department associated with them. Kind of an extension of that question is, well, what if I just don't select a department? Well, technically you're then running it for all departments, just like if you don't select a location, you're running it for all locations. So if you did it this way, if you ran it for no department selected, no location selected, and you didn't consolidate, then basically what you would get, if I just do this just to get this up on screen as an example, essentially what you would see is, in this particular instance, this is the Dubuque location. Actually, we are seeing all the numbers there, so it does look like it is kind of actually consolidating those numbers for us. In version 11, I believe, it would actually give us, in essence, because this is the Dubuque location, and then the next one would be the Iowa City location, and there's no activity for that, so there's no report for Iowa City. Essentially what it would do is it would show you, in essence, 8 reports. The first 4 for the Dubuque location by department, and then the second 4 for the second location by department. It looks like actually we've got that some intelligence built into the new report for that. You'll probably pick up I didn't run that prior to today's session. I just wanted to kind of mention that on the fly since I was thinking of it. And that's now all on the recording. So you get to share all my gaffes in live with me, even on the recording afterwards. So, but that basically is what I wanted to talk about today with budgets, and as a kind of added bonus with departments. So hopefully that made sense. Hopefully that kind of gets you thinking about, okay, now what numbers do I have to plug into the system so that I can make sure I am meeting my budget? Because obviously if you have a budget, then you have a game plan for growing your business and making sure you've got enough money to pay the electric bill and all kinds of things like that. So feel free to ask any questions that you have in relation to budgets, to departments, even income statements, why not? And I'll do my best to answer those as we go. Looking to the week ahead, kind of wrapping up our Astonishing Accounting Month on this Wednesday, April 24th, we will be doing a session on, and now let me just pull that up because I don't remember off the top of my head exactly what that seminar will be on. So let me pull that up here quick. So that's going to be on, oh, right, the human element, how to audit your ledger, how to see, if numbers are jiving, what to look for, how to make adjustments if necessary, when is the appropriate time to do reversals if necessary. So we're going to be exploring that on Wednesday, and then on Friday, same bat time, same bat channel, we will be exploring the final year-end close. So how to close out your ledger on a yearly basis, how to close accounting periods. So if you want to make sure that no one's going back into months that you've considered closed, even though it's not necessary, you may want to close accounting periods just to make sure that if someone backdates something that shouldn't have gotten backdated, it's not going to actually throw off your ledger. So we're going to be exploring that on Friday. And then looking to the month ahead, I don't have the webinar calendar finalized just yet as far as the actual webinars that will be on which days, but if we're following our normal pattern, then we would be looking at the weeks of May 6th and May 20th. Now, I will be out of the office for the first portion of May. So I'll be returning Thursday, May 9th. So there won't be webinars on May 6th or May 8th, but we will have one on May 10th, Friday, May 10th. And then we'll be having our usual 3 webinars on Monday, Wednesday, and Friday, the 20th, 22nd, and 24th, respectively. I don't have, again, the actual dates pinned down as far as which webinars will be on which days, but definitely look forward to a webinar on the report designer, the custom report designer. We'll be looking at also how to do some more automated things in version 12, kind of a getting back to the whole getting to know V12 theme that we originally explored way back in, I think, November and December. And we'll be looking at how to do things like setting up tasks and automated backups and things of that nature. And then I'm still exploring some other things, but like I said, I'll pin down a final webinar calendar, hopefully by the end of this week. If not, then definitely by the end of the month. So next week, Tuesday, is the end of the month. So wow, time is flying. This year is just rolling right along. Thanks so much for attending today's webinar on budgeting with the bonus on departments. And if I didn't answer any questions that you had thought of, I didn't see any questions come in. So, but if you think of a question afterward and you want to ask me that question, feel free to email me at training@technology4retailers.com. It will also be mentioned in the follow-up email that's going to be automated from GoToWebinar. So definitely email me any questions you have. I'll do my best to get back to you in a timely manner, hopefully within a day or two. And as always, thanks for attending, and I hope you make it a great day.